Hi everybody, how's it going today? It's Phil Khan. Hope you guys have been doing incredibly well. One of the big reasons why I've been kind of MIA is because I've been moving and just waiting for furniture to come. So I don't have a proper desk yet right now. So here I am in my kitchen area, just on the bar area. So I'll be trading here for about a week until my desk actually comes in. I ordered a custom desk, which I'm very excited to get. So guys, let's talk about what has been going on with Bitcoin, okay? And the reason we need to do this is simply because it's going to give us a very clear indication of what the market is going or what it could be doing, right? So let's talk about this fifth wave right here. Now, I even saw Eric Cho think the exact same thing. So according to Elliott Wave, this is most likely the very first substructure somewhere in there, right? And then we get our third structure around here. This is my opinion. Very, 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 very shallow third wave retracement over here. And then I see this as basically the fifth wave right there that's happening. And I see the exact same thing with EOS as well at a very short time frame. So let's go to a 6-hour chart first of all and talk about what it looks like it's doing, right? We see possibly 1, and this is a possible 2. 1, 2, 3, 4, and a 5 right there as well for EOS. So if we play our cards right now, there's a potential chance to make a ridiculous gain in the next few days. So what I'll be doing is most likely laddering this to at least the $100,000 position. I'll show you guys my summary here for my margin that I allocated. So I put in about a little bit more than 40K that I'm gonna let myself play here. So, well, 40K margin, right? So I'm gonna be playing up to whatever I have here, like 27K plus 115. So about 140 at most, okay? So let's do a detailed Elliott Wave count right now and see what kind of possible gain we can get, and let's talk about detailed risk to reward setups. So this is subwaves 1, 2, 3, 4, and 5 according to Elliott Wave. And this was the support candle that actually ended up signaling to the market, hey, you know what? We're actually going to keep going up. We don't want to go down right now. So let's take a look at this in a little bit more detail, right? Let's zoom out to a 3-hour chart. Actually, let's also go to a, let me get TradingView up. I don't even have it up here. You know, I'm not going to use TradingView because I don't want to sign in and go get my password from the other room there. Okay, so Bitcoin is getting a big rejection, okay? Just guys got to keep this in mind. Now, there could be an ending fifth wave diagonal, which I'm not too concerned about if it does happen. In fact, if it does happen, I'll be much happier because it will now give us a higher probability of confirming a possible downtrend. So what we want to do are look for these confluent signs where it's saying, hey, you know what? There's one reason why the market could be moving in this particular direction. And then we look for a second reason, and then a third reason, and a fourth reason. And the more reasons we have, the higher of a probability we will have in general for it to be going a particular way. So first of all, let's confirm this. Would you guys agree with me that this could be, in a smaller time frame, we could have got a 1 already, right? Like this could have been the 1 right there, 1, right? And that could have been a 3 around there, 4, and that could be a 5 already. And the reason why I say that that's a most likely a fifth count in there is because if we look on a 3-hour time frame right here, okay, aside from RSI, we already see a rejection of 2.54%. So we always have to think about this from the perspective of bulls versus bears. And the bulls, they want to drive up the market, right? So bulls have the mentality of wanting to buy low so they can sell high. But of course, a bear, for the people that don't know, you can actually make this money on betting that the market will go down. And this is called shorting the market, right? Where you're simply borrowing from the funding account, and you're playing in your margin account, and you're getting the difference of what you will buy it back at a cheaper price. So just as an example, if you guys don't know what shorting is, if you were to buy short one Bitcoin at $10,000 as an example, okay, you shorted 1 Bitcoin. So that means that you sold 1 Bitcoin, right? But you still have to pay back the 1 Bitcoin that you borrowed because you sold from the exchange, right? So let's say it goes out to 9K and then you buy it back at 9K. So you close your position there. Then what that will mean is that because there's a difference of 10,000 where you first sold it and then 9,000 when you bought it back, you buy back that 1 Bitcoin, it goes back to the exchange that you paid automatically, and then you will get to keep that difference of the $1,000. So what I personally specialize in is, of course, a bear market, as you guys know from my reputation, right? I specialize in shorting the market, and I believe 70 to 80% of my income is generated and derived from shorting the market. So with this candle right here, the bears, they want to enter short positions. So what they do in their margin account right here, okay, right here, is they will margin sell right here, and then it adds to their short position. So I'm just in about a $27,000 position right now, which is not that much relative to how much this market can move and the position sizing that I have allocated for this particular trade, okay? So now we look at this count and we say, all right, there's a battle between the bulls and the bears, okay? Think of it like the bulls have tried very hard to push up the market. That is why you see this really long wick, okay? The wick says the bulls are trying to push it up after this very bullish candle form. And they pushed it up about 2.5%, but the bears simply started selling, or people started taking profit, or short positions were entered. But either way, it was rejected by 2.63% in the past 3 hours or 1 hour so far. This candle still has about a long ways to go, all right? It's got tons of ways to go. So the 1 hour candle though is the one that I'd be worried about, because this is the one right here that looks like it's about to close with a very bearish candle. So now what we want to look for is we want to look for signs of bearishness, right? We want to say, hey, is the RSI on wave 3 higher than it is on wave 5? If it is higher on the RSI for wave 3 than it is on wave 5, then we just simply say that wave 5 is losing steam. So that's a very fair assumption to make, right? And what we can clearly see immediately is that this right here is absolutely bearishly diverging. And the reason we say it is bearishly diverging is because on the previous highs, right? The previous, like for example here and there, if you compare the price action first, what we see is that wave 5 clearly is a higher price action in terms of higher price than wave 3. But we can say that, well, the strength is actually lower though, right? It's the opposite for the strength. And when it is the opposite with higher price action, but lower high on RSI, it implies that the price action, generally the price that it achieved, it simply doesn't have as much steam to go up as much anymore. So there's a stronger probability of the market reversing. Now, it doesn't guarantee at that instantaneous moment that the market will actually start going down, but it does increase the probability. And when we look for these confluent signs, okay, what do we see, guys? Think about the confluent reasons we see right now, okay? What we see is we see a lower RSI, right? Lower high on the RSI, okay, bam, that's one reason right there. And what else do we see? We look on the 1 hour chart, we say 10 minutes left, it's got a shooting star candle. If the bulls don't win in the next 10 minutes and they don't break higher than the high of this candle or make this candle look much more bullish, right, than it is bearish right now, then we can confirm that the momentum will have shifted over to the actual bearish side. So now let's look at other indicators as well, okay? Do we see anything on the 30-minute chart here? All right, well, we do see that the RSI just simply can't get that high anymore. And it's exhibiting the exact same symptoms as well, right? Where it's definitely peaking out right there. Just can't do it, man. Like, it simply just cannot do it. Yeah, I mean, you look on the 30-minute chart and it's getting a shooting star candle right there with a hanging man, right? So what that hanging man implies is that the previous candle, the bulls have attempted to push it up, but the bears, not only did they go on the attack, right? So bulls tried to attack upwards, right? But the bulls defended very well. That's why it created this really long wick right there. But not only did they defend successfully, but what they also said was, you know what, let's actually go on the offense right now as well. And they did go on the offense with this really long wick, right? So now the bulls have pushed it down, the bears have pushed it down another percent. So now you gotta wonder, right? They push it down up 2.2, and then they push it down another percent right there. That's like a 3% difference between these if you guys don't see, right? So right now it's at I'm a little bit down right now in my position, right? So now let's talk about stop loss, okay? Let's talk about, okay, before we go there, we also want to make this point right now that the histogram as well, okay, it looks like it's bearishly diverging in terms of the price action right here, right? Very low histogram tick. It's very difficult for me to think that it will go much higher than that. The only reason why it might go higher than that is simply because there's one more small subwave that will be formed. And I think that it will go up to 2, possibly, if it does make one more possible subwave. Notice how I'm being very careful with the words that I'm using, because I just don't want to be wrong, right? Nobody wants to be wrong. I'm trying to look for the fib extension tool right now, man. I can't find it. Okay, so let's see what this extension made right here. So this one made like a 161.8. So we can easily assume that this one might make a 261.8. So then I would say about 9.4 as the absolute high that it could possibly reach, like $9.40, okay? And then we're gonna make like a nasty correction, I think. This never saves. Every time like I close it, it just never ever saves. Is your guys is like that as well? It's really irritating, right? Okay, so let's do this now. Just making sure that I align it to the proper high. Make sure on a very tight time frame like this, you guys are always doing it right by lining it up like that. So okay, 9.35 now. I'm gonna be a little bit have a much more conservative approach rather than a aggressive one, right? So that could be the first subwave. So now let's assume that this was actually the first subwave, or sorry, there could be one more subwave up there, okay? So it's to about 935-ish. So then what you want to do, okay, I'm going to give you guys a lesson with Elliott Wave right now, all right? Elliott Wave says this, okay? So for every motive impulse wave up, what we will conclude is that there's 5 motive waves up, okay? And this forms one massive wave in the end. And the reason why it forms one wave is because inside of these small waves, there are actually small fractals inside of them as well. And these waves and fractals, they will ebb and they will flow all across Elliott waves, right? So do you see how this made 1, 2, 3, 4, 5 in there, which actually made only the first wave? Well, this one right here, you guys can also deduce that this big wave where it made 1, 2, 3, 4, 5 is actually no different whatsoever than these particular structures in here as well for wave 1. So once again, if this is subwave 1 and there's 5 inside of it, it's actually no different than this entire subwave right there, okay? So now let me show you guys something with Fibonacci. If you take Fibonacci retracement tool, what you'll see right here is that this covers only the first subwave, but what we can also say is that not only did it cover the first subwave of this 5 of the big one, but it also covered the entire 5 subwaves of the smaller ones, right? The small ones inside of there. Therefore, if you are doing Fibonacci retracement, make sure you are only taking it for all of that wave there, and then you also take it for all of this wave right here as well. I'm just making sure I stay in drawing tool, okay? Make sure you guys also right click on your screen, go to drawing tools, stay in drawing mode. Trust me, it's going to change the way you guys do analysis because it allows you to keep the option that you have without having to always go back to the menu. So then what you want to do is you take your Fibonacci retracement for wave 3 right there, okay? And that will give you wave 4. So now what you will never want to do is take Fibonacci retracement of just wave 5. Never do that because you have to remember the logic that if you took the Fibonacci retracement of this first subwave of the big one, which also has 5 in it as well, then you're also, right, by correlation, you have to also take it of the big structure here as well, okay? So this is a little bit more of a detailed explanation that I normally give. I know a lot of you guys know it already, but keep in mind, right guys, you guys might know everything that I'm talking about already, but iteration, like reiterating it many times reinforces it, right? And the only time you guys should actually stop listening to me and it becomes very repetitive despite knowing it or not, is make sure that you guys can actually put the theory into practice, right? Make sure you guys are actually making money, right? If you're not making money and you're listening to what I'm saying, but you're brushing it off as well because you think that you know it, guys, it's all about attitude as well, okay? I'm not above, I'm not below. I'm always next to you guys, and I want to make sure that we're on the same level. So don't think that in any way at all that I'm not trying to help you guys, all right? I felt really bad, honestly, for being away for a while. I'm sorry, guys. So now, we're going to talk about this, okay? This is going to be really cool. Now we're going to get to risk to reward. I saved that for the end because it's very important for us to assess the situation first before we dive in further, okay? So now we're going to do this right there. That could be the 5 waves right there. Now what we do is we take our Fibonacci retracement, as we've talked about already, of the entire structure, okay guys? Of the entire structure right there. Now, if I take my entire structure right there, and I also assume that we could still get up to higher than that, right? So then what we do is we take our risk to reward for our short position. My base price is about 910, right? 910.06 or something. We'll make sure it's accurate right there. My risk to reward, I'll probably end up laddering all the way up to like 950 ranges even, knowing me, if it goes up there, because I believe that our size is diverging already bearishly. So then if we do it like that, okay, what we see easily is that, guys, that's a beautiful risk to reward ratio. We're talking about 1, a high probability play right here that has a very strong chance to actually downtrend rather than up, okay? 2, a beautiful risk to reward ratio of 2 to 1, okay? And you combine that with the probability of this actually coming to fruition, very high. And 3, guys, we're talking about a 9% gain, okay? Now, let me put this into perspective for you guys, okay? I'm playing a $27,000 position right now. We'll round it up to about 10%, okay? If I actually hit my target right here, and I've been gone all week, I haven't really traded much other than the last time you guys saw me. Well, guys, if this one trade that I could swing will make me $2,700 in a day or two, it's a very good swing position. So I'm going to follow up with you guys in a few hours or when there's an actual update for this particular trade of mine. I think we've beat it to death already about the signs that it's exhibiting already. And I'll make sure I have TradingView up as well for the next time I come back to this video. So thanks for being patient with me being gone for a bit. I hope you guys have missed me and I'll be back right away. And when I am back, it's going to feel like I was only gone for 1 second for you guys. But remember, to me, it's like, it could be, who knows, 5 hours. So see you guys in a bit. Alright guys, Bitcoin is really taking a nosedive right now. Like really taking a nosedive. And I think that this is going to close my position right here. Unintentionally. I'm not trying to. I gotta adjust this. Come on. Whatever. If it closes my position, whatever. I'm cool with 300 bucks. I'll play on the next very, very slight bounce. It's only me right there. It's only a little bit. Come on. Just close it. Yes. Yes, guys. That was a really good trade. Woo! That was a good trade, guys. Trust me, it wasn't me because of my tweet that did that, okay? It was not because of my tweet. I don't move markets like 2-3%, okay, guys? But yeah, that was a really good trade. I'm still going to short, guys. I want this to bounce up a little bit to 904. I'm going to play a lot of bounces to yield even more than that 10% target of mine. So this right here was a 22 plus 13, 25-minute trade. 25-minute trade right here that I just did for $300. I'm cool with that, guys. I'm leaving. I'm not trading anymore today. I'm gonna go do right here. I'm gonna go check this out. This is what I'm gonna do now, okay, guys? I'm just gonna go sit down right there. That's all that I have here right now. I'm waiting for furniture to come. I'm just gonna go Netflix and chill by myself all night. I miss Luna so much. Okay, guys, I'm closing my position. You guys see this right here? You guys see that? I'm gonna close it. Bam! Easy money.